And in our top business story, the Abu Dhabi Statistics Centre has released October consumer price data for the capital on Sunday. The figures show that the inflation rate in the capital's consumer prices for the first 10 months of the year was 3.1% compared with the same period of 2013, as shown by the increase in the CPI to 128.1 points during the first 10 months of 2014, up from 124.2 points during the same period of 2013. Housing and utility costs, which account for almost 38% of consumer expenses, jumped 5.4% year-on-year in October. And prices of food and non-alcoholic beverages, which account for 16% of the basket, increased 4% on an annual basis. Nakheel and Souk Residences, a joint venture between IFA Hotels and Resorts and Istithmar World, have reached an agreement on the Golden Mile mixed-use development on Palm Jumeirah. Under the agreement, Nakheel will assume full ownership of the remaining unsold units in the Golden Mile, which comprises residential, office and retail space, while Souk Residences is relieved of substantial liabilities. The agreement paves the way for more local facilities, including a supermarket, shops and cafes at the Golden Mile, benefiting residents of the 10-building complex and those living in other parts of Palm Jumeirah. More than 430,000 square feet of retail and office space, plus a number of residential units, is available at the development. Ali Rashid Luther, the chairman of Nakheel, was quoted as saying that we have come to an agreement that is satisfactory and beneficial to all parties and look forward to realizing the full potential of the Golden Mile, which is a key component of the Palm Jumeirah. Digital transformation of banking, the changing regulations and growth of Islamic banking for SME lending was in top focus during the second edition of UAE Banking Federation's Middle East Banking Forum. More than 300 officials and senior representatives from regional and international banks and leading financial institutions gathered at the one-day annual forum, which discussed the future prospects and changes in the regional banking industry. The forum touched upon a number of key discussions, which included the digital transformation through mobile banking and its impact on retail banking. Other discussions which topped the agenda at the forum also included corporate governance structures, Islamic banking, as well as financial support for the SME sector, which was identified at around 90% of the enterprises in the UAE at the federal level. Speaking during the panel discussion, the Director of Strategy and Policy Division at the Mohammed bin Rashid Establishment for SME Development stated that SME financing is a highly profitable avenue for banks, adding that the role of the customer relationship managers is gaining significance. Although lack of transparency in business plans may be a concern for providing loans to the SMEs, banks should use the customers to be their partners for growth and offer innovative schemes for financial support.
For the SME market, especially when they are young SMEs, but they are good business models, they have a potential to grow, I think the government can do a bit more by co-partnering with the banks. For example, in India and Singapore, there's a very good credit guarantee model that we co-share the risk of the loans, so that in the event of a default, there's a clear sharing of risk, and also it encourages the banks to be more prepared to lend monies and drive more customers, get more customers for their bottom line. And SME market is something very profitable, as we have heard. The second thing they could do is to look at more other ways of financing, asset financing, factory financing, leasing. These are other options that they can do, even go into the microloan market, which can be very lucrative, and build customers at a young age.
During the forum, Islamic banking was also highlighted as an emerging sector for SME financing. As Islamic banking remains a young industry, the representative from Ernst & Young urged that banks should create a balance between standardization and innovation for Islamic banking. Although the profit model may be slightly different than conventional banking, it is expected to gear more interest in the coming years as a result of growth in revenues and market share for the financial institutions.
The reason why Islamic banks are particularly interested in the SME segment is there is a very unique opportunity in the making. We believe this is a once-in-a-15-year opportunity. And what is happening is the balance of world economic and trade growth is shifting eastwards. And there's a group of 25 rapid growth markets that will account for 50% of this growth going forward. And from the GCC, UAE and Saudi are the two markets in that group of 25 markets. What is very important for Islamic banks is so far they focused on product innovation. Going forward, they have to now top it up with banking experience, a better banking experience as well, which again, EY conducted a survey, and we collected feedback from 2 million customers of Islamic banks in terms of what is going well and not going well. And very clearly, a common theme across markets and across banks was customers felt banks need to listen more in terms of what their requirements and needs are. And they need to transform the banking experience that's on offer.
The US dollar index was largely unchanged in trading last week, closing at 87.50 after making a new 4.5-year high at 88.26 levels. Following a stronger start in the early parts of last week, the US dollar pared most of its gains on Thursday and then Friday following a stronger run of US data, which has this increased expectations of an interest rate hike in the Fed, which would ultimately weigh down US dollar prospects. Turning to the week ahead, the FOMC releases its meeting minutes, which will lend further insights into the Fed's view on future rates. To find out more about this, we earlier spoke to Gaurav Kashyap, the head of futures at Al-Pari Middle East.
Well, it's a big week on the U.S. calendar with the release of the all-important FOMC meeting minutes due out on Wednesday. Remember, the FOMC officially completely wound down their bond buying program of 6 years at their last meeting, but the meeting minutes will be more important to see some kind of insight into when the Fed plans on increasing their interest rates. Now, so far they've been very dovish with regards to when they plan on increasing rates. The expectation is still the same. We're expecting a rate hike in the mid part of 2015. We expect them to continue to maintain a dovish tone. Remember, we've not seen much traction in the US data recently. The most recent non-farm payrolls was a little weaker than expected, and we expect the Fed to use that to continue the dovish tone with regards to future interest rates. So if that's the case that materializes, we expect to see the US dollar make some ground in the week ahead. Also coming out on the US calendar is US inflationary data. That's expected to come in at 1.6%, slightly lower than the previous reading of 1.7%. So once again, this will also give further ammunition to the FOMC to continue to hold rates slightly longer than expected. And once again, this will continue to support the US dollar prospects. If we move over to the Eurozone, we have some key economic sentiment data, which is the ZUI survey coming from Germany, as well as the overall Eurozone. This is expected to be slightly lower, and this should continue to weigh down forecasts for the Euro USD. Now remember, we saw the Euro hit my target of 125.60 last week, but we expect the pair to give up some of its gains and to trade slightly lower in the week ahead. It's also going to be a big week for the British pound. We have the release of the Bank of England meeting minutes, and we also have inflationary data coming from the UK. Now the pound is trading around 1.57 against the US dollar. We expect this range to continue in the week ahead. And finally, if we look at the Indian rupee contract on the Dubai Gold and Commodities Exchange, we expect this pair to trade between 161.30 and 162.90 in the week ahead. The pair has found a good range, trading range in this channel, and although we have no major economic data coming out from India, we're expecting a stronger dollar to weigh down that Indian rupee, but it should have good support at 161.30 levels in the week ahead.